The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing Icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business. From $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Arter SEO.
Welcome to Icons of Real Estate Podcast. I'm your host, Patty Teal. Today's guest is John Casmon. John's a real estate entrepreneur who has partnered with busy professionals to invest close to $100 million worth in apartments. He hosts a popular podcast, Multifamily Insights, where he covers multifamily and marketing insights, just as the name says. He's the founder of Casmon Capital, which helps working professionals and their families invest in apartment communities to create a passive income stream and tax benefits. Welcome, John.
Patty, thank you for having me on the show today.
Oh, it's great to have you here. I meant to tell you also, as we were getting started, you have the best voice for audio. Have you been told that before?
I've heard it a couple times. Thank you for that.
Yes, it's great. Yeah. So how we usually start is we ask our guests to share their story, their journey, how you got to where you are today with over $100 million worth in apartments. How did you get there?
Yeah, so it's interesting. You mentioned the voice. When I was in college, I thought I wanted to be a radio broadcaster, either radio or TV. And I finally started looking up starting salaries for radio broadcasters. And let's just say I was less than amused and decided that was not going to be the life for me. Instead, I went to the very lucrative career of advertising, where instead of starting out at, I think it was like $16,000 an hour or a year for radio, I would start at $23,000 a year.
Well,
so
it's an improvement.
Very smart decision after 4.5 years of college to get a $23K a year job. Nonetheless, I did well, kind of thrived and started to advance in my career. Made it to the client side of the business at General Motors in Detroit. And I was there from 2007 to 2011, where, of course, the economy started to change. And the company I was working for kind of became one of the faces of the economic downturn. And in that moment, I kind of realized that, I really couldn't rely solely on a W-2 job. And I wanted to figure out how I could insulate myself from those kind of radical changes in the economy. Thought about real estate. I had read Rich Dad, Poor Dad back in college. And those lessons just kind of came back to me and said, you know what, I want to invest in real estate. I ended up moving to Chicago. First property we bought was a 2-unit. At this point, I got married with my wife, and we bought a 2-unit, house hacked it, lived in 1 unit, rented out the other unit. We did extremely well there. So this concept was playing out in real life. So now went from kind of the book smarts that I read to podcasts and meetups and people I was meeting to real life application for myself. Bought a 3-unit building that did well, bought an 8-unit building, started to flip some properties to generate more income, but I just kept running out of my own money. So at that point, I warmed up to the idea of partnering with other people because a lot of my friends and family were watching what we were doing and they were very interested in being a part of it. But they didn't want to take the same time and energy that I had invested to learn how to invest and to network and to build up your confidence and to build up your resources. So it finally clicked to say, well, hey, maybe we can work together with them and they can partner with me and they can get the same benefits. So fast forward a little bit, we have now invested over $100 million worth of apartments with friends and family and other people we've met through our travels. And we continue to scale and grow. But it's been a wild journey. Again, lots of different lessons learned from, partnerships to deal structures to market selection and all the above. But really excited about where we're heading and going forward.
Well, gosh, congratulations. I'm so impressed with people like you that start very small. Just a house hack. And then you just keep building and building and building, and then seeing how it entices other people to want to do what you're doing. So would you say that most of the people that invest with you, I know it said on your website, there are everyday investors. So there are people who have other jobs, but want to do more than just their job. And maybe the stock market doesn't interest them?
Yeah, I mean, we work with everyday professionals. So, it's almost as if I could go back to where I was when I was in corporate America, particularly that time when I was in Detroit working at GM, if I could go back to my colleagues at that time, those are a lot of the people we were looking to tap into and work with. People who had money, they were making six figures, had a pretty good job. Were not necessarily looking to quit their jobs and their careers, but they had financial challenges where they're looking at the stock market, they're seeing the instability of that market, they're trying to figure out where else can they park their capital. They may want a little bit of passive income. They may want to diversify from the stock market. They may want to get some of the tax benefits that they hear about from real estate. But again, they don't have the energy and the time to try to figure out real estate as a whole for themselves. Maybe they have a house or a rental. Maybe they got a 2 unit building. Maybe they flipped a house before. But again, not necessarily building up a portfolio that is strategic, that is also scalable for them. And that's where we kind of come into play and help everyday professionals.
Yeah, what a great service that you're providing from them for them. Now, how do they find you? Is it mostly connections that you've already had, or are there other ways that you reach out to these potential investors?
Yeah, it's a great question. So for us, it comes down to who do we have connections with, and we're always looking to build kind of our network organically. So that's going to start with friends and family, and that's going to expand from there. But it really comes down to how do you let people know you even exist? And I
Exactly.
mentioned my background in marketing and advertising. Well, I spent 15 years doing that, and in
Hmm.
15 years doing marketing and advertising for various brands and companies, one thing I've learned is you absolutely have to have a message and you've got to be able to attract people to you. And what I tell people is you want to create a platform, right? If you can create a platform, one, you create a bit of authority. And authority is important because it's one thing to tell people something, tell them what you're doing. Hey, I'm investing in real estate, or hey, I'm a real estate agent and I'm doing XYZ. It's another thing to persuade them to come partner with you because they see you as a person of influence, and you establish that influence by having a stage. So, creating a stage is a great way to get people to actually listen to you. Now, I'm not saying that that's going to make them want to invest with you, but it at least will get them to listen to you. If you have a podcast, if you have a meetup, if you have, some other event, a blog, content you're creating on social media, videos, that gives people something to watch or to listen to, and then to dissect what they're hearing you say. And from there, they'll either like what they're hearing and say, wow, that made a lot of sense. That seems interesting. Or, wow, I didn't know I could invest in real estate that way. Let me learn more. So it'll either spark their curiosity to learn more, or they're going to realize, yeah, not really that interested in this, and they're going to turn off, right? But creating that platform is a great way to grow and connect with more people. And that's something we've been able to do through a lot of touch points. We have our podcast called Multifamily Insights. It is a #1 rated multifamily podcast that you can find anywhere. We've done over 400 plus episodes at this point of that show. So we've been running strong for 4.5 years, almost 5 years exactly now. I have a meetup that we do in Chicago where we meet with other investors who are looking to grow their own multifamily portfolio, either on the active side or on the passive side. And then on top of that, we do a conference and I create content via social media and blog posts as well. So we do a lot of content to try to educate people about what we do, but also to let people in our network know, hey, here's what we're doing. And if you know anybody who's interested in learning more, we'd be welcome. We'd be happy to have a conversation with them.
Yeah, that's such good advice. And I know people who listen to your podcast, I'm sure they start to get a feeling that they know you and that they trust you. That's just
Yeah,
the way it is.
exactly.
Hmm.
Well, it's important because, there's a saying that you do business with people you know, like, and trust. And trust is really where things start to happen, right? I can know you and I can like you, does not mean I'm going to do business with you, right?
Hmm.
I have friends and family that have known me for most of my life, if not all of my life. Doesn't mean they're going to invest with me, right? They
Hmm.
have to trust you, but they also have to trust you in that specific context. Again, I mentioned I'm an advertiser and marketer. I've won awards for that. So when I left corporate America to do this full time, I thought a lot of those people I worked with would
Hmm.
be eager to do business with me, right? They know what kind of marketer I was. They know
Hmm.
how much of a hard worker I was, how much of an entrepreneur I was. Didn't happen because they didn't know me as a real estate investor,
Sure.
right? They didn't trust me and the background I had as a real estate investor coming out. And part of that was, things I could control, and part of it wasn't. And I tell everyone that if you are looking to grow a business, whether you are a real estate agent and you're looking to get more clients, if you are a multifamily syndicator, or just an entrepreneur in general, there are three things that you have to understand. I call them the three C's. And the first C is confidence. You've got to be confident in what you're doing. Now, the confidence can't be manufactured. It can't be fake. It can't be hubris. It can't be fake it till you make it. I'm talking about confidence that comes from putting in the work. Now, I'm
Mhm.
not necessarily saying you have to have the results just yet, but if you put in the work the same way I did, reading books, listening to podcasts, attending events and conferences, surrounding yourself with other investors, getting that knowledge base where you know what's supposed to happen and how it's supposed to happen, and you know what you're doing. That confidence, you can't fake that. So that confidence has to be there when you're talking to people, because they'll know whether or not they can believe you know what you're talking about based on how you talk, right? If you sound,
Right.
and if I've known you your whole life, or, we go back, you can't fake that with me. If you
No.
don't know what you're talking about, I'm going to know that you seem nervous, or, he's tripping over his words, or whatever the case may be. So that confidence is key. The second is going to be credibility. Now, credibility can be leveraged, but it also comes from your own experience. So while I didn't have a long real estate background coming into this, I did have corporate experience. I won awards. I worked for a company that went into bankruptcy and emerged out of bankruptcy. I helped lead, one of my brands to be the fastest growing brand in America. I was recognized as one of the top advertisers and marketers in the country. So I had won awards that demonstrated that I had some business savvy. So now it's a matter of how do I take that and, parlay that into real estate. So that was one thing that we had to do. And I had a little bit of real estate experience. But the other part about credibility is you can leverage it. So who did I have around me? I can leverage my mentor. I can leverage my property managers. I can leverage other people in my circle who had more experience than I had, and say, here's what I've done. Here's what I know. And here are the people I've surrounded myself with to make sure we're successful. Right. So that's the credibility we're talking about. And then that third C is the connections. And we've talked about that. Who do you know? Who's in your circle? And if you don't have those connections in your network today, how do you expand your circle so you can get those connections? And that gets into some of the things we talked about with creating a thought leadership platform and reaching out to your network to explain to them what it is that you do, how you help people, how you provide value for them, and the kind of people you're looking to network with. And I think as a real estate agent, that's something people don't really do a lot of. You see people post all the time, just listed or just sold, but they don't necessarily articulate the value. If you tell people the value of what you created for that customer, that client, and then you articulate the kind of people you help and who you want to work with, now you've given people a very clear vision of who you're trying to work with and who in their network might be a value for them to introduce you to. And that's the disconnect, right? It's not just a just closed, just sold. It's I just helped this person in this way. Here's how I'm uniquely positioned to help that individual, or here's the value I provided to this individual. And if you know anyone who's looking for that same kind of value, I would welcome an introduction. It's a little bit of a nuance, but it's a big difference in the results of how people see that message and process that message about how it can help you with your business.
That's a great tip. I haven't heard too many people talk about that. So when you're giving those nuances, as you call them, as to how you help the specific person, is it done through picking up the phone and calling? Is it done on a grander scale through marketing? How do you actually let people know that specific value that you provided to those people?
Yes, and yes. I think you want to find multiple touch points to communicate. Going back to my advertising and marketing days, you really want to have a multi-channel solution. So it's never about just one vehicle, right? We're always looking to figure out what are people looking for, how do they like to be communicated with, and how do we get the message in front of them. Let's use a brand like Coca-Cola as an example. Okay, so actually, let's use Pepsi. So let's
Okay.
use Pepsi as an example. Pepsi is one of my former clients, so I got to use Pepsi. All right. So if you know the Pepsi brand, they don't only do television commercials. They don't only do radio commercials, right? You're going to see magazine ads. You're going to see digital ads online. You're going to see social media posts from them. You're going to see events that they put on, sponsorships like the Super Bowl halftime show. You're going to see when you go into a grocery store or you go into a gas station, they'll have like cooler door decals and they'll have other little signage there. So those are all various touch points where a consumer maybe, intercepted and get the message of what they've got to offer. So it's the same thing here. You want to figure out what are the touch points. It's not limited to I'm just going to do email or I'm only going to do
Mm-hmm.
social media posts or I'm going to do neighborhood flyers. You want to put together a kind of a marketing campaign where it
Right.
all works together so you understand what are the various touch points, what are the ways you want to communicate, and what do you want to communicate in those various touch points. So how you take advantage of the medium and really engage with people. And one of the things with social media as an example is it's meant to be social. It's meant to spark conversations. It's meant to spark connections and engagement. So how can you use social media to actually connect with people as opposed to just telling them, hey, I just sold this house. Good for
Mm-hmm.
you. But how can you use that to engage in a conversation? So with us, when it comes to investors and passive investors and busy professionals, we're trying to do the same thing and understanding, well, what do they want to know from us? How can we engage in a conversation so that we can educate them with tools and resources that can help them reach their goals?
Yeah. Oh, but you know your marketing, that's for sure. Um, so I know you're located in Ohio, but are you watching all over the country for opportunities?
So we focus on the Midwest and Southeast region. We like growing parts of both of those regions because, one, our fundamentals come down to, we are looking to understand where the market's going to be in the not so distant future. And the current dynamics, that's going to be our best indicator. Are people moving there now? Are jobs going there? Is it easy to do business with? If those things are the answer is yes, well, that's a market where we want to consider investing in. So we kind of have a 2 hour radius of where we live is what we kind of circle. So in markets like Indianapolis, Louisville, Columbus, Cincinnati, of course, those are markets we're targeting. But we do like the Southeast region as well. So a little further out, we can get into the Georgias, the Tennessees, the Carolinas. We do like those markets as well. So that's kind of our focus. When we're in those other markets, we have strategic partners who are located even closer. So it gives us a great advantage to partner with those people who are even closer to those markets. So we don't have to try to spread ourselves too thin. I think one mistake a lot of investors make is they go and look at, what are the best markets or the hottest markets to invest in. And even though the market is, a 6 hour flight away, they're trying to invest there. And it's just really difficult, particularly in a competitive market, to thrive when you are that far away and you don't have boots on the ground. So for us, we try to focus in our backyard a little bit more, or at least close to our backyard, and have strategic partnerships in other areas.
Right. Sounds like a very sensible approach. Now, how conservative are your investments, or are some of them, taking a bigger risk than others? How do you determine who's the right person to invest and how conservative they should be?
Well, I think for everyone, you have to look at your own goals first and foremost, understand your own risk tolerance. For us, we look at that and say, we want to invest in assets that are income producing. So when we buy it, it should have a positive cash flow. And then we want to come in with a business plan to accelerate that cash flow or an increase what we call the NOI. So that's the way we approach it. So that means we're ruling out stuff like new development. We're ruling out stuff where it's 100% vacant and it's a full gut rehab project. That's not to say we will never take on a project like that, but that's not the core of our business. We prefer a property that is 85, 90% occupied, 95% occupied. It's generating money day one. But we think that there's some, under leveraged opportunities to go in and increase the business operations. So we're basically buying an existing business that's
Mm-hmm.
making money, and we have a plan to help it make more money. So that's the way we approach it.
Mm-hmm.
We like B class properties, and by B class properties, we mean properties that are desirable but not luxury.
Mm-hmm.
So it's not going to be in the best neighborhood in the city, but it's a solid, desirable neighborhood. People want to live there. We don't have a hard time getting people to want to live there or look at our places. But on the same note, it's a little bit above kind of that, just affordable area, place that people go to because they can afford it. It's not exactly the luxury spot. So it's that sweet spot in the middle. And we just like to provide a quality housing. I think that gives us the broadest range of potential renters, and it gives us range of where we can implement a business plan and create value for that renter as well.
Well, that's great. And it seems as though from the news that I watch on a daily basis that rents are going up, up, up. So is this a particularly good time for people to invest in multifamily units?
I think the time to invest in multifamily units is all time
All
because
time.
I think over the long haul, real estate in general tends to go up in value. And we recognize that there's still a shortage of apartment housing. So that shortage is at least slated for the next 8 years through
Mhm.
2030. We just simply are not developing enough housing in this country. And that goes back to the last economic downturn. So now is a good time. What I will say is pricing has gone up. There's been really a tight window of availability of units right now. So because we have less product available, you're going to see the demand shoot up, and that's what's been happening. So I think you want to be sound about your approach and your analysis, but I do think now is still a good time to invest. And we've seen that even coming out of the pandemic. There are a lot of people who were hesitant when the pandemic hit and maybe pulled back a little bit. But those folks who did invest at that time saw really, really good results. The key for us is really making sure we control the exit. So if you have the ability to give yourself flexibility on the exit, then now's a great time to invest. You're not as worried about what happens with the marketplace or the economy.
Could you describe a little more that exit plan?
Sure. So let's
Yes.
let's think about it this way. Let's just say you buy a house. If you
Hmm.
buy a house today, you typically are buying it with a 30-year mortgage. Maybe you get a 15-year mortgage. You're not necessarily thinking about, okay, this house needs to be worth 20% more in 3 years, or we're not going to make much money, right? You're
Hmm.
buying that house with a long-term view that you like the house. You're going to be in it for the next 15 to 30 years, whatever the case would be, recognizing that, hey, you might move in 5 years if you get a job offer or move somewhere else. With real estate and commercial, most of the time, investors are expecting to sell that asset at some point. So for us, the more flexibility you give yourself on when you sell and what needs to be true in the market conditions to sell, the easier it is going to be for you to control what your returns look like, and it's more conservative. So if I buy a property and I only put a 3-year loan on it and I have to either refinance or sell in 3 years, well, now I'm forced to do something in 3 years, right? I don't have a whole lot of flexibility. I have
Hmm.
3 years to achieve my goal, or I got to, at a minimum, refinancing, or may even be forced to sell. So if I have a 10-year loan, just use it as for illustrations,
Hmm.
right? If I have a 10-year loan, well, I have 10 years to figure all that out and to see what's happening in the marketplace. And maybe in year 5, I get a great offer, I decide to sell, and I can figure out what the prepayment penalty may be. Or maybe that's in year 7 or year 8 or year 3. But I have more flexibility on when I decide to exit. So I'm not as concerned with the market volatility in year 3, because I have 7 more years that I could own this property. So it's that kind of thing that if you could control the exit and have more flexibility, I'm not as concerned with what happens in the market, because I could get ahead of it. I could even, say, okay, hey, you know what? The market's starting to get soft. Why don't we refinance now, put longer term debt on it? Or we could say, hey, you know what? I think now is a good time to exit because the market's starting to get a little volatile, or we're anticipating that the market's going to change. Or at a minimum, maybe the market does get volatile and we just say, hey, we just got to hold it out, weather the storm, but things tend to improve. You can go back to, again, 2007, 2011. If you bought in 2005 and you didn't have to sell till 2015, maybe you would have did better than the person who had to sell in 2009.
Wow, that's so interesting. So it sounds like flexibility is key. I mean, who would have predicted what happened the last 2 years? So you just kind of have to watch what's going on in the market and always be ready to either hold or get rid of your asset.
Yeah, and listen, there's no such thing as the perfect investment, so it's not always going to line up that way. It's not like every single deal we do, we've got a 10-year loan in place, but I do think that you want to have flexibility on how you implement your business plan. So when you go back to risk and some of those questions, you have to look at the totality of it, right? It's not just
Hmm.
one thing. It's not just the loan. It also comes down to the business plan. How much value are you creating, right? If you're going to create a lot of value, then maybe a shorter hold period makes sense. So it just kind of depends on all of those different factors. So we like to look at it all, understand what the business plan is, and then move accordingly.
That makes sense. Now, you already talked a little bit about your podcast and how it's the number one multifamily podcast. I think you said it's called Multifamily Investing Podcast.
Multifamily
And
insights. Yep.
Oh, okay. Say it again. Multifamily Insights.
That's right.
Okay, great. I want people to be able to tune into that. But you mentioned how it has evolved. Can you talk about how it has changed?
Yeah, when I first launched the show, it was called Target Market Insights, and it was built off of the premise of how to find the best places to invest. And you asked me, where do I invest? And that was really one of the things that I was trying to figure out. At the time, I lived in Chicago, and I was starting to look to invest in other markets, and I didn't know what I should be looking at, right? Because in Chicago, I knew the neighborhoods. I knew where
Right.
people wanted to live. I knew what part of town was, hip and trendy. I knew where people were migrating to. I knew where the trains were. I knew, I kind of understood what drove a renter. I was a renter in that city for a long time.
Mm-hmm.
So I understood the dynamic of it, right? So when I bought a property, I kind of knew exactly what was going to happen there over the next couple of years by being in that city, and also, having so much background in market research. So when I moved to other markets where I didn't know the vibe of that city as well, and I would ask the locals and they would tell me things, it just didn't match kind of my gut feel. You talk to the locals and they'll say, "Oh, you want to be on this side of the city." And I'm like, "Well,
Mm-hmm.
why?" And they couldn't tell me a quantitative reason. I
Right.
got a bunch of qualitative stuff, but nothing quantitative. And I wanted to learn how the best investors across the country were figuring out where they were going to invest, and specifically not just the macro market or the MSA, but that minor, that sub market. I wanted to understand how they were selecting sub markets, and I stumbled across a lot of information. And quite frankly, I solved that question. I figured out the answer to it, and then once I figured it out, I realized that what we were really doing wasn't just market research, it was marketing holistically.
Mm-hmm.
So market research was one component of it. But again, we had to stand out with brokers. We had to build our team. We had to attract capital and attract investors. We had to do a lot of work with our branding and how do we stand out to really, position ourselves as a confident and credible resource for
Mm-hmm.
investors, right? So we had to do all of those things. So it's really more about marketing for multifamily. This was truly a business. And in any business, marketing and sales is a key component of it. So we kind of evolved the show from being just about market research and how to find the best place to invest to really being more about multifamily and marketing and kind of where those two converge. And that's really, really helpful for us to be able to tell more holistic stories, to really solve more of the challenges that we're seeing both investors and entrepreneurs make in real estate holistically, but really just to provide better value. And quite frankly, for me to tap into my background and my experiences building brands, understanding how to tell stories, understanding how to leverage social media, how to leverage some of these thought leadership platforms to stand out as well.
Wow, that's great. So I can imagine a lot of people listening and saying, I'm really interested in learning more about investment opportunities. I want to learn how I can get in touch with John. I want to listen to the podcast. What's the best way for people to follow and connect with you?
Well, two things. One, the podcast we've already mentioned, Multifamily Insights. Check that out anywhere you listen to podcasts. The other thing you can do, though, is we've put together a sample deal package. And this is great for anyone who's looking to be active and kind of run their own deals, or passive if you want to invest with a group like ours or someone else. And it's a sample deal package that allows you to see what are some of the terms that people use. What are some of the things you need to be looking for to deal? We talked about markets. So what are some of the things in the market you need to pay attention to? What should you be looking for? How are these deals structured? So if you want to start wrapping your head around that, check out our sample deal package. You can get that at casmoncapital.com/sample deal. And there you'll also get added to our newsletter. And we send out great tips and insights about every other week. And feel free to reach out to me from there.
That sounds like a great way to keep an eye on what's going on. So thank you so much for sharing that. And thank you so much, John, for being on our podcast today, Icons of Real Estate. We really appreciate it. Thank you.
Absolutely. Thank you for having me today.